Hey guys, it's Mark here, and in today's video we're going to have a look at another method for finding a potential bottom for the overall market. And if we can identify a potential bottom for the overall market, it's going to give us a great clue as where the bottom may be for a lot of the cryptocurrencies going around. Okay, so if you like this video, please hit the like button, subscribe to the channel, share it with other people, and or comment. But without further ado, I'll get underway. And I will also talk about, by the way, for the DeFi Kingdoms folk out there, I will talk about how it relates to that as well later into the video. But for now, I want to have a look at qualitative, quantitative estimation. It's a different kind of indicator. If you've ever used the relative strength index, which measures the relative strength of the buyers to the sellers based on the previous closes and so forth, this is similar, but it's kind of like a rounded off version of it, where it rounds off kind of trailing stop lines to the top and to the bottom. And it appears to be more accurate. So that's why I'm looking at that right now, because I back tested it through a number of different currencies, crypto and stocks, and it seemed to be just a better predictor of cycle bottoms and so forth. So looking at the overall stock market, first of all, if you look at the overall stock market, during the time that crypto has been around, the bottoms have always been around about at this level here. And we've seen it roughly about there. There was another market cycle bottom, and we hit it here. Here was another cycle bottom. We hit it COVID times. We hit it here. And if we were to only look at the time that Bitcoin has been around, we would think that that's about where the bottom could or should be, around there. And anybody that's only analyzing Bitcoin, if you're only looking at the Bitcoin graph, you may look at the regular relative strength index and think, well, the bottom's about there, the bottom's here, like bottom, bottom. Oh, we're about to hit the bottom here. The last time we were at the bottom way back here, it was about right, around the bottom, and here we're about at the bottom. But that's such a short history that Bitcoin's been around for that it pays to have a look at other factors too, because if you look at the stock market over a longer time frame, and you go back further, you notice, oh, wait a minute. If we look back at further and further cycles all the way back throughout history, and because this will happen with Bitcoin as well over history and crypto and everything else, the bottom's not always at this level, this level, this level, this level back here, here. Yes, that is the most frequent level, even going further back, but there are times when this has been the bottom. There was one off time during the dot-com bubble that this was the bottom. All right, dot-com bubble. And over here, during the subprime mortgage crisis, our bottom was way down here. Now, many analysts believe that this is not going to play out anywhere near as bad as the subprime mortgage crisis. We're not even in that kind of scenario, because the Fed probably wouldn't let it get that way. They would have to be reckless for it to go as bad as this. They would have to be just doing rate hike after rate hike after rate hike to the point that people are abandoning their houses because they can't pay their mortgages, and then there'd be a big economic collapse throughout the world. That's not really what the goal is for the Fed. The most likely outcome is that this is a bottoming right here. This is definitely the most likely, which would equate to, on stock market terms, one more fib level down, about 3,400, 3,500. That would be around the bottom. We would range around there and then go up. And what that would mean for Bitcoin, if we were to have that happen, is we would end up around a bottom of about our blue line here, just below, we would end up around 22 to 24k. So maybe 24k with a wick down to 22. That's if that plays out. That's the most likely based on recent history, and based on every time you end up with these cycle bottoms. People feel like it's going to be worse than the one before, but also don't forget, people thought that the cycle top was going to have a blow off top, and it didn't either. People learn from past cycles. Things get priced in. Traditionally, we have found as interest rates rise, they at first set the market off on a downtrend, but that does level out, and eventually the next year, the stock market, most years that interest rates have risen, has bounced back quite strongly the next year, and with it you would think crypto, even if the interest rates remain high. And there have been periods where interest rates have been around as high as they are now, where crypto has been on its way up, while interest rates were higher than they are now during this little period here, right? But it still went up. So it's not like that there isn't a precedent for that. But at that time, as hikes were coming through, we had a drop and then just rode along the bear line area, but slowly going up until, even with high-ish interest rates compared to now, it still went up. But that wasn't 50 points basis hike in one go like we just had. So that was a bit of a electric shock to the market, so to speak. And one more like that would probably be another little shock to the market. But you do it in 25s, do it 0, and then another 25. It's going to have much less impact. Now, the Fed also isn't going to want the interest rates to go too high, because their own debt is in like $30+ trillion. And if other countries raise their interest rates, then they can't pay for that debt for two reasons. One, because the debt gets too high. Two, because they have to print money to pay for the debt, and in which case inflation, that's your inflation again, and all crypto and everything else goes back up again while you're printing money. Thirdly, interest rates are too high. People could walk away from their homes, stuff like that, because they can't service the debt. And fourthly, if there's negative GDP for too many periods in a row, obviously you're in a recession, and with negative GDP, they don't have as much money to pay for stuff like their foreign debts. So it's only so long. It's a short-term strategy, basically, to just try and shake the market back to, I think they just want to shake it back to normal, back to the mean, really, for now, at the moment. So anyway, like looking at interest rates, though, like I said before, there's a period here where the interest rates went from where they are now to, almost the same interest rates we're at now, right? So they went up and up and up from, where are we? 2015 to 2019, right? Yet crypto, so it went 2015 to 2019. So crypto, 2015, in fact, the interest rate started rising about here, so a bit further along. So crypto went from here to here, 2019. So it went up that whole time with a blow-off top in the middle of it all. Okay? So it went from here to here, it came back to the mean, but it had its blow-off top. So all while interest rates were higher than they are now. So once it is priced in, interest rates themselves aren't things to be feared about. And generally, Bitcoin has done well with real inflation. It is more the market's interpretation of inflation, its sentiment, that has been correlated with dips, with whether it be Bitcoin, whether it be stock markets, and what have you. What I mean is, house prices went up by a lot, more than double in most countries between here and here. Inflation was rampant. It was rampant inflation. Goods, overseas travel, all sorts of stuff went up in price. But if you're just looking at the lowest common denominator, like the price of bread, the price of eggs, yeah, inflation looked like it was low, and now it looks super high because those prices are going up. So those are the things that have affected, that has the negative correlation. So yes, Bitcoin in general has been good against real inflation, not so good against when the Fed finally puts out numbers that admit that there really is inflation. So that's another thing to bear in mind. And they can't stop the money printing. So they're printing money even now. They're just printing less of it than before, but then they may have to increase it if they have trouble paying their debts. It's just a vicious cycle that's going round and round, and it's just prolonging. That's prolonging perhaps the inevitable, which might take a couple more decades to really play out, and that's why a lot of people hedge their bets by having a bit of crypto like Bitcoin and so forth, because these sort of tactics can't last forever. Okay, so looking at comparing the United States Consumer Price Index now to the stock market. We've seen inflation has been going, the prices have been going up the whole time, and the stock market's been going up. Okay, it's just when you have a big kink upwards that's like this, and then they have to do a bit of the unpredictable, like the rise in interest rates happens at quite a sharp level. The investors don't like unpredictability. They want to be able to predict and price things in, so people go risk off and you get the return towards the mean. And if that's what may happen with the stock market. It may come back towards the line it's on and then carry on upwards. I don't think the Fed wants it to be a subprime mortgage crisis collapse type thing where you end up down there, or something even like COVID, but that didn't last very long because that wasn't affecting the fundamentals of the market. It really was just more of a fear and panic, I don't know what's going on type scenario. So if we do end up down here though, that shows that there's still a fair way, as a percentage, that shows there's a fair way that we could travel. And if we do travel there, that would be as far back as that would be 2 more fib levels. That would get us down to $3,000 roughly, or thereabouts, which would take us down, I calculated on Bitcoin, down somewhere around between 17 and 20K for Bitcoin. So something to bear in mind. In a worst case scenario, I see at the moment as you go down that extra fib level down to here, and then you end up with Bitcoin around 15 to 17K. It's not to say things can't go lower. I mean, that's always a fallacy in any form of markets. That's all. That we've gone down this far, we can't go further. Tell that to the people that owned, say, shares in say stocks to do with floppy disks back in the day, or stuff to do with Polaroid cameras. Things can go differently. However, when you look at stocks that are going to be around forever, like say, like a Coca-Cola or something like that, these things do eventually, end up on the way up, just like I think a Bitcoin is in that sort of a category, but it is relatively early days. And all of the altcoins are so volatile because those market caps are so low and so easily impacted by these things. So if Bitcoin drops, a whole lot further, then a lot of the if Bitcoin does go where it appears to be heading, it appears to be at least going to retest 24K. Let's say it retests 24K. That is, at the moment, that is probably the most likely scenario, but there's also a reasonably likely scenario that it'll go lower and test 22K and maybe work down to 20. So let's say it does that, then most altcoins will bleed a lot against Bitcoin during this time. So I don't want you to think that whatever altcoin you're in, that it can't go another 50%, maybe even 80% lower than it is now. It totally could, but that period may or may not last long. What about the bullish side of things? Well, we have seen that correspondingly the other way around, when things pick up, an altcoin can take off quite quickly because of the liquidity pool pairings, and because of if market sentiment goes up, things can happen quite quickly. So we had the case where, say, Phantom as an example, went from $1.07 down to 16 cents back during Bitcoin's first dip last year, where it went and dipped all the way from down to 30K or 29K. But it rebounded. So while Bitcoin doubled in price and went from 30K to 68K, Phantom went from 16 cents to $3.48. So you're talking like a 20x move. So that's why people are in altcoins, because they're trying to dollar cost average in, because of the fact that those multiples higher in a bull run can be ridiculously higher. So many people are risk off right now. So many people are not shopping looking for you know, oh, what can I get into and so forth. But it's amazing how quickly that turns around with a few months of things looking reasonably solid. Like, let's say the Fed pivoted and didn't raise interest rates. Maybe that'll be the case maybe even later this year. And let's say consumer price index drops a little bit. You'll probably start to see money start to already flow in, and it might happen quite quickly that the bottom's already been missed and we're already a quarter of the way up. So, you know, and that's what happens with these dip downs. You don't know, it doesn't necessarily last that long. You know, this period here might take a while for it to get its last 50%, but that first little bit can be quite quick. So it pays to be risk off in this particular environment. I would say that having a wait, you know, until the macro is a little bit better is ideal. I'm like edging my way in on some bigger dips with little buys. I'm not doing too much though. I'm not necessarily selling anything at a loss, but I do like to reduce my average buy-in cost. But I'm not going to ape in unless that whole macro figure looks better. Unless we see the Fed pivot and we see something like this here. Like maybe I'll have a serious consideration if we see this red line hit down here and then the blue line, you know, the red cross through the blue, as we've seen many times. So that crossover period is generally indication of we're about to go sideways and then up. You know, here was a good indication. You know, here was a good indication here, that kind of thing. So I'd be looking for that little indication there, you know, but if that crosses through and that blue is just in line with the red, and then it's going down lower, I'm not just going to buy in just because we've hit this line here. I want to see them cross over. Okay, so I'll be looking at that, and I'll report to you guys if that happens, so you guys know that it's happening, you know, because if that happened, yeah, I would be more bullish about a bigger buy-in to try and, you know, reduce average buy-in prices and start to think about profiting from the next bull run later on. With regards to Joule, by the way, for DeFi Kingdom folk, I had a look at the last 24 hours or so, and we found that it's actually, while Bitcoin dropped a reasonable amount, Joule only dropped like less than 1% during this time because of the fact that it had such a big drop the day before when a whale sold. So it's kind of gained a little bit of that ground back, and it's just been hitting around this fib line. This is on 5-minute time frames, by the way, but it's just been hitting around our 60-cent fib line. It's been correlated to a degree with Bitcoin for today due to liquidity pools, but there has been a little bit more buyer activity as well, not just automated market makers. And the liquidity pools, has actually been a bit more buyers today. Not lots, but a little bit more to offset that difference. So it's held quite nicely for today. But that's not to say we can't go down to other fib levels. You know, 47 cents would be another level I'd be looking at, but I want to look at the macro as well. And you never know, 38 cents, not impossible. Like lower fib levels, never impossible at all, but I'm bullish about the overall ecosystem and stuff that is in development. I love that they focus so much attention on building that, which you can't see from the outside, but building the interoperability so that other people can build NFT-based games using these NFTs. They can build it, and it could run on their own subnet, which is kind of like owning their own blockchain. And the fact that Joule is used as the gas token going forwards, which it's likely to have more of an impact when a couple of things take place. Like one, when there are more players, which they're not really doing a push for more players until later, like when there's questing on Crystal Vale. Questing on Crystal Vale is coming up at some stage in the next few months. They're just holding off until they finish their bridge of, I think, their equipment-based NFTs, which is a new type of NFT that's coming. They want to be able to make sure that that is bridgeable as well. So they've got an external developer building that But once that questing comes, then there'll be a lot more transactions taking place. And also, the price that they're charging for burning is very low, to burn Joule, but they may increase that gas fee, and it still won't even cost us 1 cent per transaction. Like it's only a fraction of a fraction of a fraction of a cent right now. It's almost free. So, we haven't even seen the impact yet of burning Joule as gas. That's still to come. Obviously, player versus player is going to, and pets and equipment and all of these leveling quests, they're all going to contribute to more transactions, which means more Joule gets burned as gas, and more money goes, obviously, into the overall pool for earnings and so forth. We've got lower emissions coming up, which once those emissions are a little bit lower, that again is sort of like, that's deflationary to in a sense. So that's going to be potentially long-term helpful, short-term due to uncertainty. You never know what might happen during the days surrounding that. But also, there are other bullish things coming up with regards to other subnets. We've seen how far the prices can rise when a new subnet is launched, but also we've seen how far they can fall quite quickly, because obviously that supply squeeze can cause the prices to go up almost too fast. I think there might be a supply squeeze coming up on leveled up heroes. So that's why I'm buying more gardeners and miners at the moment. So I've been using them in my gardens. I've using them in my obviously to mine my locked Joule, but I've also been using them to mine gold. I've been using them in gardens I'm not even in, just to level them up, because I feel like when people want to mine their crystal and so forth, there may not be enough, say, level 16, level 17 miners, the really good ones. For those that have a lot of locked Joule, locked crystal, they may want to have those leveled up ones. So that's something to consider as well. Some people may do really well out of the NFTs. Even if the price drops a little, if they end up, because of the supply squeeze and there being a lower supply available, it may force the price to be higher on those types of heroes. Okay, so there's a lot coming up, a lot to be bullish about, but also a lot to be very cautious about. I'm bearish in the short term. So I'm not going all in. I'm not doing these giant purchases. I'm just lowering my average buy-in through a little bit of compounding, perhaps buying a little bit at these fib levels just to make sure I've got a little bit in there in case I've got my reading wrong and we just go up from there, or some whale comes in or an investor, and next thing you know, we never see that price again. So I do buy a little bit, but I'm not really aping in unless I see indications that there's a clear, reasonable chance that we have reached a market cycle bottom, or at least there's enough indicators that we're looking like it's pivoting the other way. All right, I hope that you've enjoyed this particular video, and I'll see you in the next one. Bye for now, everybody.